What's going on, guys? This is Foresight Capital, and today I wanted to open up analysis on Plug Power and explain why I'm going short on the stock even though I'm long-term bullish. If you've been following the channel, you'll know that we've been covering Palantir, Jumia, and even Rocket Mortgage and Rocket Companies, and all of those trades have been on the long bias side, so I wanted to explore a little bit and show you all how I kind of identify short setups and take advantage of those. So I've gone ahead and drawn out my take profit lines, but each of these could also work if you're bullish on the stock and are either afraid or don't want to short or buy puts on the stock. Each of these lines could also be areas that you could consider buying. Now, Plug Power has had an absolutely insane year, as a lot of the stocks that we've been following on this channel have, and it's gone from under $3 per share up to new highs today of $29.70 per share. And then we had a little bit of a pullback, and this particular setup is one that I've seen multiple times that has led to potential for some really good profits, and that's why I'm actually taking a look at the downside, even though I believe in Plug Power and their overall business model in the long term. So the setup that we're looking at is what you could refer to as either a double top or a triple top, depending really on how you want to view individual daily price action. Double top or triple top is when a stock has tried to break out to new highs or break levels of resistance multiple times and has ultimately been rejected by the bears or bulls give up on buying at that particular level. And we see that here in Plug's price action at this level of the green line, which is basically around $28.75 per share. Even though we broke out to new highs today and technically set a higher high than yesterday, we were ultimately rejected throughout the afternoon on breaking out to that new price and setting new all-time highs and closing there, and actually closed a good bit down on the day, almost 7% down at $26.74, and then even faded a little bit in aftermarket hours down to $26.51. So in fact, some of the potential for this short trade has already been eroded if the stock opens and continues to trade down or sideways. Ideally, we would want to get an entry near this all-time high. But going back to the double top or triple top terminology, we can see that after this run up that started basically around the $14 per share range, the price just went up nearly every day until we touched the first all-time high here, which was back on November 24th, and that high was about $28.70. And then we had a little bit of a pullback throughout the next week, breaking below this red support level, which is ultimately where I would take some of my profit if I were short or consider a long entry based on some of the price action that we'll highlight a little later in the video. And then we made another charge for it over the past couple of days, trying to break through that all-time high. The high of this particular candle here, which was yesterday, December 8th, was $29.49 per share. However, we can see that we didn't close above this white line, and actually the close of the candle was $28.74 per share, basically right in line with this previous November 24th high. We then made another run this morning. We basically opened flat with that and made a run up to $29.69 per share, but were ultimately smashed back down in price to close at $26.74, down about 7% on the day. So what this shows is that the bulls haven't really had the power to break this thing to new all-time highs. I think realistically, once we break this $29.69 and close above that level, we'll easily break through 30 and continue running there. But this presents a good short opportunity to either buy puts or short the stock. Personally, I buy puts for the most part because I've been burned on shorting the stocks on multiple occasions, and buying puts limits the potential for losses there, while also amplifies the potential for profits. So the way that I would be trading this over the coming days is ideally I'd want to see the stock open up a little bit and possibly kind of test this $28.75 per share range that has proven 3 times to be a price level that bears just aren't willing to give up. And if we can go to the $28 to $28.50 per share and then start to lose a little bit of volume on the buying action, I think it would be a really great entry. At that point, we would be oversold or overbought, on the RSI, which is when a lot of buyers start to taper off and consider maybe waiting for the RSI to come back down into normal ranges. We would be testing highs, but not quite breaking them. There is one bullish signal here, and that is that we did technically set a new all-time high today, and we didn't close below the low of this previous candle, but this was such a wide candle that I feel like that was hard to happen in today's price action, and it might take a day or two to ultimately trend back down in that direction. So how I would be playing this would be if we were to open up and to charge up towards the 28.50 to 28.70 per share range and then see a drop in volume, which you can identify not by looking at daily charts, but looking more at the 1 hour charts, because then you'll be able to more closely identify volume declining. And if the volume declines and the buyers are kind of drying up near the all-time highs, it would be even further confirmation that the price could trend down. At that point, we would be looking to trend down to, first off, the $23.95 to $24 per share range. That was realistically the support that was created by a couple of days worth of price action here. This is very recent price action, but it was also a little bit of resistance here back in the middle of November, and ultimately caused the price to kind of dip below it and then used it as resistance again. So it's not a super firm line, and in fact I would probably not even consider taking profit at this level. But if you're looking for an entry to go long, you would start to consider probably in this red level, which is a discount of about $5 per share from highs, or almost $6 per share from highs, and from even today's close, which was $26.74, you would still be buying at about a $3 per share discount, which is over 10% discount from current price. Where I would really be looking to take profits for this stock, if we're rejected by all-time highs, is I would be looking for a pullback to this yellow line. The yellow line's indicated here about the 1903 range. You could just kind of round it down to $19. This was pretty firm resistance previously. We had multiple days that acted as resistance here, both on the initial run-up. We had a pullback down to this green support line, and then multiple days again that used this as resistance before we broke above throughout the trend and then used it as support for multiple days. So this yellow 1903 line has really proven to be an indecision line for a lot of investors, and that's where I would ultimately be kind of looking to take profit from a trade that was entered here. We would be taking this trade then from almost $29 per share down to $19 for about a $10 per share profit. Of course, we would be, in my case, trading puts, so that would be even amplified by the 100 shares per contract. So a really nice potential trade there. But also, if you're buying long for Plug, and again, I'm a bullish investor on this company. In fact, I would ideally buy puts, take profit somewhere in the 19 per share range, and then flip around and buy shares and hold them for the long term. I missed out on some of this run up actually because I thought we were going to get a bigger pullback from this $19 per share range than we did, and I really at that time wanted to buy closer to 11, but we just never quite got there. So I'm going to have to adjust where I'm willing to buy up to probably this $19 per share range. But this is a really great take profit target if you're going short on this stock, because I think that this isn't a firm price point, but just kind of if you're very bullish and don't think the stock is going to pull back much, this would be a good point to enter. But ideally, if you're buying this stock, you're probably looking for that $19 per share range. It's a 30% discount, a really great place to buy, a really great company that I think has a lot of potential to increase in price in the future. And then, of course, the green line is if the price hits here, I'm buying no matter what, and I'll probably buy a much larger position than the yellow support line that we've had. I don't know that we'll hit these price points again. Anything's possible when we've had a run up like this from $23 to 30, or from $2.50 to $30 per share is insane price action. It wouldn't be unthinkable to have a pullback of 50% from basically all-time highs, but I'm just not sure that we'll get there. However, if we do, this is where I look at entering basically double a position. So I'm not sure if I've mentioned this in any of my videos, but when I'm buying at the yellow line, I'm typically buying 300 to 400 shares. If we hit my green price target, the one where I'm a buyer no matter what, I'm typically doubling that and going to 600 to 800 shares into a stock, depending on the price point. Sometimes it can be as little as 500, depending on how much I have to allocate towards the particular stock. But ideally, when we get a setup like this with a triple top, I've already made some profit on the way down, and we'll be able to allocate that profit plus some of my account balance towards buying these shares for the long term. And that's really kind of the goal of this particular trade, would be to capture this double top. We want to get a little bit more increase in price because I think some of the profit potential was already taken away when we closed down 7% today by being rejected by this white line. So ideally, again, $28.50 per share range, and we start buying puts for the $20 to $19 per share range to really capitalize on what I think is going to be at least a little bit of a pullback. And the beautiful thing about puts is you can take your profit early. So if we have one big red day, but you don't feel like we're going to continue down through the red support, you can still take your profit and then go ahead and buy the stock at a discount from where it is. So just kind of wanted to open up that analysis. I'm very curious to see how this is going to play out over the next couple of days. I think if Plug ultimately fails to break this 29.69 for one day and kind of falls back to that 28.50 range, it could be a great opportunity to buy some puts and target that $20 per share range. That's personally what I'm doing, but of course do your own research. Don't follow my trades. I am wrong a lot of the time, but that's just kind of how I would be playing this stock. Thanks for stopping by. Again, if this video brought you some value, or if you want to follow up on the Plug trade, because I will be following up on it, don't forget to subscribe, and I'll catch you in the next one.